Hello everyone, and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We're starting off with a weekly chart. If you remember from the previous episode, we were measuring the half of this wick and seeing price attempt to deliver and draw on a new all-time high. We put in a high and started to come back off of that range so far in the week, and we're starting to get below the constant encroachment of this wick. So this is going to be a level that I'm going to continue utilizing through the rest of the week to see whether price is going to be gravitating towards another delivery on the highs or begin drawing back below the open of the week. So as we cross through this opening price on the current candle we're printing, if we start to overlap that range, I would be suspecting that price will draw back down and deliver into these old highs and attempt to make a delivery towards half of the previous week's range as an entirety, and these clean lows down here at the closure of this candle and the opening of this candle, and eventually try and overlap that previous weekly wick constant encroachment again. The 25% is measured right here, but about half of this range would be a draw on liquidity for me if we get a stronger draw lower than the open here. On the daily chart, we can kind of see that idea playing out. We took note of the sensitivity of that rejection block level from the daily chart and noted the delivery through the high of the previous week's range, which this is Friday's candle. So Monday delivered through Friday's high and created a new all-time high, but we closed inside of that previous high on this candle, and opening here, all we did was deliver one more time higher, take out some buy side liquidity, and then trade back below the open. So as we rallied here and then crossed below the open, we started to fill in all of this range and made a delivery back into that rejection block and our daily buy side imbalance high. So I'll be watching on the open here to see if we get a kind of a response back down into this range. If there's a sensitivity in terms of a discount on the daily rejection block high or this wick high, I would be, just watching to see if it'll deliver up into a new high. So if we drop down into the daily rejection block or see sensitivity in this high again on the open for tomorrow, I'm not gonna stand in the way of a new all-time high delivery. So I'll be watching the open and pay attention to if there's sensitivity at this level or not, to see if price is gonna gravitate heavily toward this buy side imbalance again and try and overlap that, or drop down into this range, come back above the open, and then start drawing back up toward the highs again where these rejection blocks are here, and make an attempt to dig inside this wick. And we don't have to see a new all-time high delivery tomorrow. If that does happen, we could easily see an inside day be printed, and not expect much more until Thursday. We have FOMC meeting minutes tomorrow, so that's going to be the biggest kind of factor in terms of having a breakout or not. So keep 2 o'clock tomorrow on your radar. As we drop down into the 4-hour chart, it becomes more prevalent of the delivery that we're seeing as a bearish 3 drives pattern. We see this rally here and a sharp decline into our daily level. We see another rally into all-time highs that gave the idea that there was not going to be such a deep retracement, but all it did was put in one more high and then sunk it down on not only this low, but all of this sell side liquidity in here and delivered back into the opening of the week. So they dropped it once, rallied it, and then gave the idea of seeing some support being built up here. All it did was fake out bullish traders here and then drop it on them and deliver into 2 levels of major sell side liquidity. We redeliver back into our 4-hour buy side imbalance and notice the sensitivity at the low of that daily rejection block and the high of our daily buy side imbalance. we delivered back into the weekly gap opening and did not get a candle closure inside that range. So again, as we open for tomorrow, I'm going to be watching this large down close candle that creates this imbalance in this range, and utilizing a couple of our same hourly levels for refinement to give us kind of a sharper view on which levels we will be seeing create those turning points, and utilize those barometers on lower time frames to create these higher time frame scenarios to play out. So we can obviously see this large sell side liquidity pool with a partially filled 4-hour gap, and that daily buy side imbalance low would be the easiest low hanging fruit in case we did begin breaking down and rejecting off of this 4-hour imbalance. So going into tomorrow, I'll be watching this initially as a barometer for a downside draw, just because we've put in this 3 drives pattern. So my first inclination is going to be bearish. But if we fail that, as we spoke about on the higher time frames, if we fail to deliver through the opening of the daily candle to the downside, I'll be watching for a consolidation / rally profile and limiting my upside objective to 150. As I drop down on the hourly chart, we can see that same imbalance that we've been bringing throughout the week. We initially utilized it as an inversion level to deliver highs here. Price sank back below that range and utilized the high of it as a premium array with this imbalance here. We dropped heavily into our daily level and then did a reversal over the weekend and consolidated at the low of that purple shaded range, and then traded through the high and delivered on a new high of the week. We used it as support, delivered on a new high of the week, and then traded down, used it as support again, came back and respected midnight opening price while dipping down into that 1 hourly SIBI. Delivered one more time on a new all-time high, and then that's that 3 drives idea playing out, and we drop heavily through this range, completely cutting through the imbalance and referencing this rejection box here and the daily imbalance high and our 4-hour level and that daily rejection block and our new week opening gap. So there's a lot of clustering of levels at this 25,000 price range. So watching for tomorrow, if we can limit our upside objective to that 4-hour sell side imbalance. I'm refining this level on the 4-hour, which is also this level on the hourly, but I'm seeing where this older level that I've been watching from the previous day, where that overlaps inside of the new imbalance that was created. So I'm able to limit my upside objective with old price action and old imbalances. So if we use that same idea, we would also be watching this imbalance here. So specifically paying attention to see the constant encroachment of this range and sensitivity at the low of this range. So if we draw up into this SIBI and 4-hour SIBI overlap and respect the low and start dropping lower, my objective would be 24,920, the low of that daily buy side imbalance. And if we draw higher and start delivering through the 120s level, which is about the midpoint of this range, I'm going to start feeling like a consolidation is about to take place, or a reversal once again to the upside. So I'm recognizing that this could be a nice reversal pattern playing out, so I'm going to give it a benefit of the doubt to see if this imbalance will send us lower. And again, if it's not able to perform as a sensitive level, as a premium array, and it starts acting as discount, the only other option is to either get out of the way or attempt to take longs into higher premium levels, which would be that imbalance. I'm not going to be suspecting a new high on the week just yet. I want to see what tomorrow's price action is going to look like. If we fail to reach into this level at all, I'm going to be paying attention to that wick constant encroachment that we ended up overlapping inside of during the close of today's drop. So we rallied higher, dropped down into our new week opening gap, and then pulled off of the low. But as we closed the day, we started to overlap this range here, which is a down close candle, so it's a bullish order block, but it has a large wick. So if there's sensitivity at this low, I'm gonna be seeing this as more of a balanced price range idea. And if we start breaking lower by this level, I'll be able to utilize this gap for my upside objective. So initially, because we're already inside this level, I'm watching for sensitivity here. If we don't see sensitivity for bearishness in this range, I'll be suspecting the SIBI, and if the SIBI is traded through, I'm going to be getting out of the way and expecting a high and complete delivery through this range. On the 15-minute time frame, I just limited our scope to today's price action. So we opened and then had an initial drop down into our hourly SIBI level and consolidated throughout Asia, and then had one strong pop up right at midnight. And then after midnight, we consolidate, trend a little bit lower, and start utilizing that hourly SIBI high as a discount array while stabbing into all of this sell side from these candles here. We drop down below these relatively equal lows that was engineered during this move and then break higher. Begin utilizing the new day opening gap for a range to accumulate at and rally into Monday's high. We have a nice reversal here on the lower time frames, but seeing it on the 15-minute chart, we have to be watching this imbalance, and seeing price start to close below this range would be our first indication of a market structure shift. Seeing an attempt to rally with this up close candle and then failure on the two subsequent candles reveals to us that instead of a bullish idea, we're actually putting in a short-term swing high. So we have a high here and a high here being put in place, and trading below this low, we have our classic market structure shift idea with a failure swing high. So we rally up, failure to create a new high, we break down, this is the low in between, and we overlap this imbalance and again this imbalance on the same move. Drawing those imbalances out in price reveals to us an inversion array. As we cross through those bullish levels and begin to see respect of the constant encroachment from the downside as a premium array, we can utilize these levels as a selling opportunity, and that grants us a delivery into the new day open gap, which was my target for that short little clip that I posted, and it blew through my expectations for the morning and delivered very strongly down to the new week opening gap. So it almost it finished my Wednesday's objective in the first couple of hours of the day today. So that's what's kind of putting me on a heavily bearish idea, and if we can't be bearish tomorrow, I'd rather it consolidate and limit my objectives higher. I recognize that we're rallying into all-time highs frequently, but I'm not gonna try and continue longing after we put in a triple top idea. I don't think it's very wise to rally and continue buying into a bullish three drives. I want to see that attempt to try and play out first, and then fail to play out, and then by the reversal, if that makes sense. On the 5-minute chart, we can see those levels a little bit closer. Throughout Asia, we see that rally, then we open at midnight, consolidate inside of the new day opening gap, break down and go into our hourly SIBI, and spend time accumulating at the high of that range, and reject from the upper quadrant. So there's no imbalance to the downside here. We instead run higher, break this high, and leave multiple imbalances in its wake. We consolidate at the new day opening gap here, and then going into the pre-market, we leave a strong rally here with the imbalance here, and price is accumulated from that level and delivers us into Monday's high. After Monday's high is delivered, we begin breaking down, and there's a 5-minute sell side imbalance here, which I utilize as my level to get short from. And after we broke down below this low, the confirmation that I needed to see was this high stay below this high. So we create an intermediate term high here at this high with the two lower highs to the left and the right of it. Price sinks lower and is delivering in a high resistance manner here. There's no imbalances that is created and then retraded into, just wicks. So you have to be a little bit more technical here to capitalize on selling in those wicks and those up close candles. You can see how there's a bearish order block here. After it gets overlapped, we produce another up close candle, which is another bearish order block. We want to see this phenomenon happen in the order blocks that we want to be trading on. This gives us a signal that it's go time and is our propulsion candle. This is a bearish propulsion candle. It's confirmed by seeing a strong drop afterwards. We cascade below London low in the Asia range, and then deliver it all the way into Monday's low, and then consolidate going into the end of the day. On the 1-minute chart, I just wanted to show you guys what the first presentation fair value gap looked like. There's the initial respect of it, and then they took everyone's buy stops out here and overlapped the high of that first presentation fair value gap, then come back below it, and then continue to sell off throughout the rest of the day, consolidate pretty much all day after lunch. So seeing this rally into the highs here after 12 o'clock, we attempt to start breaking down again, but it fails to do so. So seeing a shift again like that, after a strong rally like this, we're kind of putting our expectations for a stronger drop to the sidelines. So we put in our intermediate term low here, and it's confirmed after this shift here. So it's going to be telling us to limit our expectations to just a consolidation to in the rest of the day. Alright, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, leave a like and a comment. And as always, don't forget to subscribe. I'll see you all tomorrow.